Friends, today something shocking happened in Indian stock market. In just one single day, Indian IT stocks crashed so badly that nearly 2 lakh crore of wealth was wiped out. Infosys, TCS, Wipro, HCL all fell sharply. And the reason is not inflation, not RBI, not results. The trigger was a new AI tool launched by a US startup called Anthropic. So the big question is, can AI really destroy India's IT outsourcing model? Is this panic real or is the market overreact? In this video, I'll break it down step by step in simple language so even non-finance people can understand. Let's start. The bloodbath. First, let's look at what actually happened in numbers. The Nifty IT index fell nearly 6% in one day. That is massive fall for sector index. In just a few trading hours, 2 lakh crore market value vanished. Why did investors panic so much? Because investors suddenly realized something scary. AI may reduce the need for human outsourcing, and Indian IT companies depend heavily on human billing. This fear triggered what we call a market bloodbath. But before we blame AI, we must understand who caused this fear. The disruptor Anthropic. So, who is Anthropic? Anthropic is a US based AI startup founded by former OpenAI employees. Yes, the same people who built ChatGPT. Their goal is to build safe, powerful, enterprise grade AI systems. Their flagship product is Claude, a direct competitor to ChatGPT. Until now, Claude was just an AI assistant, but recently Anthropic launched something far more dangerous for IT companies. They launched Claude Cowork. What is Claude Cowork? Claude Cowork is not just a chatbot, it comes with 11 powerful AI plugins that can automate real business work. Let me give you some examples. Legal automation. AI can review contracts, extract clauses, and identify risks. Sales intelligence. Analyze customers, generate insights, automate follow ups. Marketing workflows. Create campaigns, optimize content, track the performance. Analytics and planning. Process the data, generate the reports, recommend the actions. Now listen carefully. This AI doesn't just answer questions, it executes entire workflows on its own. Why? This is a game changer. Earlier, AI was like an assistant. You ask, it answers. Cloud work is like an employee. It plans, then executes, then improves. Here is a real world comparison. Before AI, 10 lawyers review 1,000 contracts, takes 6 weeks, and cost around 50 lakhs. After AI reviews contracts in 3 days, flags only critical issues, cost drop to 5 lakhs. Now imagine this happening across IT, legal, analytics, and support services. This is why investors panic. This fear was not limited to India, it is across the world. US software stocks fell, European IT firms weakened, Asian tech indices declined, but India got hit the hardest. Why? Because India's IT industry is built on outsourcing and manpower. Core fear is billable hour model. This is the heart of the problem. Indian IT companies earn money mainly through staff augmentation, which is billing per employee per hour. Second is project outsourcing, billing based on team size. Third is maintenance and support, long term human driven contracts. Now imagine this scenario: old model have 50 developers maintaining the systems. The contract value is 15 crore per year, and duration for this contract is 3 to 5 years. The AI future will be 10 developers plus AI tool, and the contract value will be 5 crores, and the duration will be 1 to 2 years. The simple, same work, less people, lower revenue, and this is what scared investors. The market psychology, which is sell first, ask later. Markets don't wait for confirmation. The moment investors sense a future earnings risk, they sell. Then what happens? Algorithmic trading kicks in, stop losses trigger, momentum selling accelerates. This creates a chain reaction. That's why stocks fell fast and hard. The real threat versus overreaction. Now, let's be balanced. Be a case. If it is a bear case, AI automates 30 to 40% of IT works, margin compress, traditional outsourcing shrinks, revenue growth slows in 2 to 3 years. Where it is a bull case, AI creates new opportunities, Indian IT firms pivot to AI integration, clients still need customization, companies reskill their employees. Even Tech Mahindra CEOs say this is the market overreaction. AI is a tool, not a replacement. So the truth lies somewhere in between. Short term versus long term impact. Today, revenues are intact, contracts are running, no immediate collapse. Next 6 to 12 months, AI pilots pilot work, some contract renegotiations. In the 2 to 3 years, business model transformation becomes critical. 5 plus years, winners will be those who adapted fast. What investors should watch? If you are an investor, don't panic. Watch these four things. First one is quarterly earnings. Second, AI adoption in the client contracts. Third one is new AI partnerships. Fourth, employee reskilling efforts. Stock price falls don't always mean danger. Sometimes they create long term opportunities. Let me summarize. This crash happened due to fear of disruption, not destruction. AI didn't kill revenue overnight, it changed the expectations about the future. Indian IT companies won't die, but they must evolve. The real shift is from labor arbitrage to intelligence arbitrage. The question is not, will AI kill IT jobs? The real question is, who adapts faster in AI technology? Do you think this crash is buying opportunity or a warning signal? If you found this video useful, like, share, and subscribe. I will see you in the next one. Thank you.